Welcome to Explain the Charts, where we break down the markets for you. Today, January 24th, 2025, we're diving into Apple, APL, a tech giant currently facing headwinds. Recent news indicates a year-to-date decline in Apple, with some analysts citing concerns about China's iPhone sales, antitrust lawsuits, and iPhone 16 demand. However, others remain bullish due to the company's potential in artificial intelligence and the smart home market. Let's turn to the charts to see if they corroborate this narrative. Examining the daily chart for Apple, we observe a period of consolidation in October and early November 2024, followed by a strong uptrend that persisted until mid-December. Notice a significant peak around $255, acting as initial resistance. The price then experienced a retracement, settling around $220 in January 2025. This consolidation could be interpreted as a period of indecision in the market, as buyers and sellers are weighing various factors. Now let's zoom in on the 1-hour chart to see the price action more clearly. We observe several instances of bullish and bearish engulfing patterns, short-term reversals, and pullbacks throughout the recent price fluctuations. Note that the volume is relatively high at certain points, indicating the market's strength during these movements. These short-term patterns provide further context to the larger daily trends, suggesting some short-term volatility, but they don't necessarily negate the broader picture. The 15-minute chart offers the most granular view, revealing high-frequency price movements. We can identify minor support and resistance levels that emerge within the shorter timeframes. These levels can be useful for short-term traders looking for quick profits. However, it's important to keep in mind that these smaller price levels could be subject to frequent changes. In short, the 15-minute chart is important for more active short-term traders. Let's look at the overall picture. Combining the news and the chart data, the current situation for Apple appears somewhat mixed. The recent pullback from the December peak is consistent with what we see in the news, suggesting that the market might be cautious. However, the uptrend that occurred from October to December was significant. This is where we might start to get a clearer idea of which direction the stock might go, the long-term trends. Based on the analysis, here's a recap. The $255 level represents significant resistance, a breach of which would be strongly bullish. Reaching this level appears less likely in the near term, but could happen if positive news regarding AI, smart home products, or generally positive economic conditions emerge. On the other hand, the $220 level served as support earlier in January. A break below this support could signal renewed bearish momentum. Other things to look for include the volume. High volume during price increases or decreases reinforces the strength of that movement. Keep an eye on any announcements concerning Apple's earnings reports. These reports could significantly influence the price, potentially driving it above the resistance or pushing it further below the support. Remember, this is an analysis and not financial advice. Always do your own research and understand the risks involved.